I want to talk to you guys about one issue that kept coming up this week, and the issue was conviction. Now, there's a lot of different, reasons people have issues with conviction, and the main reason is it's just emotion. They see the P&L, they see that they're green, they get concerned that they're going to give back these short-term gains for whatever reason. They just want to lock that money in, and they don't realize that, okay, even if you see that the chart has more upside, and they want to take those trades off, even though they know they're basically shooting themselves in the foot in regards to risk reward, they do it anyways. And that's, a huge thing in trading that you have to stop doing. There's two things to trading that will make you profitable. And they both correspond to risk reward. And when you talk about risk reward, you're talking about how much you're willing to risk and how much you're trying to make. Once you figure out that you can control risk, that's great. But if you're not able to let things run, it doesn't matter how much you're controlling risk, because if you're always risking the same amount and you're always looking at opportunities, let's say you're risking this is the entry, this is your risk amount of 1, and you're always looking for 3-to-1 risk reward opportunities. But whenever the trade goes up to that one area, you always take off the profits, your actual risk reward becomes 1-to-1. And that's not what we want, because we know if we have a 1-to-1 risk reward ratio, we will never be profitable. What we need to do is allow these things to run. And by having no conviction, you're actually shooting yourself in the foot in terms of profitability later on down the road. If you repeat this, and you're able to let these things run, when you are in a trend, you keep holding it long, you move your stops up, you're going to skew your risk reward in your favor, and you will be profitable over the course of time. The thing is, these small little losses you take, the -1, you got to be okay with this. Whatever the amount you're risking per trade, you should be fine with losing that amount of money. If you're not, you got to reduce your size. Reduce your size until you do not care. Once you do not care, you can repeat this. And over the course of time, that size will increase as you become more consistent. Well, that's the first step. Now, when you're in a trade and and it's running, how can you actually control that emotion behind it? Not taking things off completely. You can be scaling out of the trade, locking in pieces at, certain resistance levels that we're telling you, or, that how to chart certain highs if you're going long, certain lows if you're going short. Once that's done, another thing that you should be doing is just moving your stops up. Once the stock is in the money, the risk literally on that trade should become 0, because you should have your stop above your average. Now, when you have a trend that's intact, you never let that trend break and then fall towards your stop. If the trend breaks, you just exit the trade completely. You can always get back into the trade lower, always. So that's another thing. But one of the biggest keys in controlling risk reward is just taking that P&L off. Don't stare at it all day. You stare at your P&L, you will cut things off very quick. I actually don't even have my P&L up. I have my averages up, and I know what I'm, in where I'm at, and I know what size I have, but I'm not looking at the actual P&L until, at the end of the day. Now, that's one way to control the emotion side. In the actual trade, you have the chart itself. When you're not focusing on the P&L, you're focusing on the chart. And when you focus on the chart, you do the right stuff. You're listening to the chart. Breaks the trend, you get out. Holds the trend, you stay in the position longer. I had a lot of traders this week that were playing the VIX short. They missed maybe the Wednesday. I talked to a lot of traders on Wednesday, and then they shorted the SPY, and they were long UVXY on Thursday. And I had a lot of them reach out and go, hey, that what we talked about in terms of conviction helped. And what they were doing was simply just looking at the chart. The easiest trades this week were playing the UVXY long and playing the SPY short. It was a one click and then just literally scaling out as it goes. It was absolutely linear to the downside on the market, and UVXY pushing up, so not hard at all. But the key to controlling conviction, take your P&L off, only play the chart, only focus on the chart, and scale out of the stock. As you scale out, you're locking in profit so that you go, okay, at least I'm making some money here, making some money there. It's going to help you emotionally. And then move those stops up to in the money, and then keep moving them up. If you still have problems taking profits too early, a rule that you can just use is have a stop on the trade. You're not allowed to exit the trade by scaling out of the last half. You just have to move your stop up until you get stopped out of the trade. So that's another thing to do. But anyways, that's it's just something I wanted to talk about, just because this is a lot of what kept coming up this week. And just try these things. See what happens when you try it. It may fix the problem, it may not. And if it doesn't, we can talk more. But try it for now, see what happens, and then we can kind of go from there.